So friends, let's continue with the smart money concept trap zones. Now, what are these trap zones? Now, this concept is probably not that much known in the SMC community world as they think that they are actually trading like the banks, right? They trade like smart money. They are the smartest in this business, so they know absolutely how to skyrocket this business. Now, this is absolutely not true, and I'm going to show you and prove it by you with this concept which is called trap zones. Okay, so I like to just mark it with a T, which means it's a trap zone. It's made for people to make believe that something will happen at these areas, but it will not happen what they think that will happen. So it's basically a very simple concept. You can just give it a very quick definition, which means it is a supply zone or a demand zone which does not work. And what I mean by does not work is it will not successfully break structure. Okay, it will give you a movement. Okay, not always, but it will give you many times a specific reaction. To really make people exciting and believing that this thing is going to take off or will melt to the downside, and then ranging a little bit and then totally hit their stop loss. Okay, because with these movements they will just trap additional liquidity within the market. So let me just explain to you on the first example, which is you see price is moving up, right? It's moving up, higher highs, right? Higher lows, breaking structure, and so on. So what does the average trader expect? Well, they expect price to continue with this trend, right? Some retail traders would say yes, we got a bullish trend. Some would say yes, we got demand zone after demand zone. The advanced SMC trader would say yes, we have order flow, so we move on from demand to demand zone. So what they think is the next demand will also work, and this will continue forever, and the whole SMC community will be super rich, right? Yeah, so you can see it already. It's not the case. And this is exactly an SMC trap. So price will come to that level and it will just go crazy to the upside, right? To make them exciting, right? They give you the push, right? But what they do, and the main reason for everything is because they want to come into the supply area. They want to make here a mitigation, and then they want to go down to collect this full liquidity from here. And afterwards, price could eventually go all the way back up, or it will just continue to drop down depending on what context you have on your chart. Okay, so this is very basic. I think the majority know this type of concept. It's right now something which you see very often on the chart, right? You probably just didn't give it a name, So I just like to call it a name. Personally, I do not map out these trap zones that often. Why? Because it's already clear what you see. It's just like an additional confirmation that if you see everybody wants to take this trade at that specific zone, then you know already this is the trap zone, right? So when you see that every SMC trader has the same analysis like you, then you know already, okay, this will more than likely not work out. Earlier in my early education, what I've always said is the difference between an SMC trader and us advanced SMC traders or institutional traders, call it like you want it. There is just one difference between them and us. It is that we just wait a little bit longer till we get into the trade. And that's exactly the point, So you just wait a little bit and you do not get trapped, because you understand when price is giving you the reaction and every SMC trader is staking on the longs, because on the lower time frame what you will see is this kind of formation, right? So you got again not a demand, and so on, and bullish breaks after bullish breaks, and they think this will go crazy, and you just start realizing, but hey, I got here something, right? Maybe you see, yeah, but we are in general right now in a POY or in a context where we should actually expect price to drop down, right? Because you are in a bearish context, you probably have here some form of supply zone. So why shouldn't you expect right now here price to reverse? So these kind of things you need to understand, and you need to understand the overall context in order to read that, to mind where is right now this Is it really an SMT? Is it really a trap zone or isn't one, right? So this is probably which will be a little bit difficult, but I will show you then on specific examples on how we will apply it. But very simple. This concept should just tell you understand where the majority is looking to take a trade, okay? Because the first one is not an SMT. Why? Because almost nobody is looking at the first demand zone. Probably not even us, for instance. Could be the case because we do not understand right now the overall story. In the next demand, there are already the first professional traders who do take the trade. The next one, much more traders do join this uptrend. But at this point, everybody's looking, right? Everybody's looking. And whenever everybody's looking, there is a very nice quote from Warren Buffett. So whenever the majority is hyped for something, you should be scared, okay? You should be that one who is scared. Because you do not want to do what the masses is doing. You always want to do exactly the opposite what the masses is doing. Whenever the masses is scared, you should be here and attack. So that would be here in this case, this demand. So the masses is not looking at this demand zone because they would just say, yeah, but where is my break of structure, for instance? Okay, because you do not have a break of structure, right? Let's say this is your example. This is how the market looks. You would say, but hey, where's my break of structure? I'm not going to look for it. But that's exactly where we should understand, hey, yo, I want to take that trade, okay? Hey, I would like to take that trade. This is already a little bit difficult because at that point, already a few do join. And already that one could be an SMT, for instance, okay? I do not know the context. But here, that would be already a potential SMT zone, for instance, just from what we can see here right now. And this here is like 100% that it will be an SMT at some point, okay? Maybe it'll give you another push-up, maybe. But then you will read it from the overall situation if it will be one or if it will not be one, okay? And our idea is that we will not take the long. I mean, you could take the long. Even us, we trade SMT sometimes on these trap zones because we know, hey, yo, I would just execute then another short and I will close my long exactly when price will come to the supply. And yeah, then you can actually ping pong the market, for instance, okay? Here, the exact opposite example, price is moving down, moving down, moving down, building this trend of liquidity. Everybody is hyped. Everybody wants to see the market dropping down. But what we do understand is, again, the same kind of thing. The moment where everybody's trying to go for a short, it's exactly the moment where we need to look and to understand, hey, maybe I should take a long. Maybe this is the point where I should rethink everything and we need to go long. Okay? So you see, with this concept, I just want to open up a little bit your eyes because everybody's so fixed. When you see a demand zone or a supply zone, they want to just trade what that name says, right? Supply zone is screaming to sell. A demand zone is screaming to buy. It is correct to view it like that, but like I said, not in every context, okay? And in these contexts, what I share here, never, okay? Never. I'm always super scary when I see price giving me like thousands of mitigation at the same point. I don't like to even consider such trades. And sometimes it works, right? Sometimes you will even see, okay, it's melting down. But that will have a total different reason because the overall context will look totally different, okay? Then, let's go to another example. And that is one which everybody knows. And this is exactly what everybody's trading. But I'm still going to show you that because this is something which many people forget about, to view it or to put it in a context like we do it. The same kind of thing. Price is moving, moving, moving. And then you got your SMT here. And in this case, the SMT, the trap zone, will not give you a reaction. That demand zone here will just lead immediately for price to break it. Okay, price will just go back down. And then you see the classic BOS. Now, every SMC trader is telling you, yes, great, we got a break of structure. We need to go here short, but not here. The majority will tell you at the extreme because the extremes are the best. And here's like another learning within this concept. The extreme do not always need to work out. Sometimes it does. Here, of course, again, the context is important to see how it looks like. Okay, do we have here some form of liquidity within it? How does it look on a higher time frame? Where is the overall target? Are we right now in a bullish market, bearish market? Okay, so you see so many things which you need to consider. Multiple time frame analysis. What time frame is this right now? What we have here and so on. Okay, so it's hard to tell you, okay, is the supply here to short from, or is it from the extreme? But here I just want to give you the knowledge about, do not always believe that the extremes are the one to go for. Why? Because extremes are always a target. Extreme will always be a target. Why? Because if price, like you can see here, is bullish, right, moving up, where is the next target? If this is a valid demand, what actually the high? So price needs to take out the high, and then that was a valid demand. Now we did take out the high. What we do expect is, again, that price will take out the high, and so on. So right now here, what do you expect is for price to take out a high. So this is the point where extremes are not automatically the safe haven like the SMC community is trying to teach you. So I'm just trying to give you right now here everything what will tell you to really succeed here in this market, and to understand that not every single day is the same. Okay, well, sometimes the extreme will work, sometimes that one OB in the middle will work out, sometimes one right at the start could also be, sometimes it's just totally cracking down before, then it will give you a major pullback, and then it will just hunt some form of liquidity, will mitigate some random OB, and it will just go down. Okay, so you will have so many options, and this is something which you can never explain with basic SMC trading, and this is what we try to do with this here, what we have. So back to the examples. Like I said, this is the most classic one where you see break of structure, right? And like I said, everybody's looking at it. So be careful when you see these kind of things. Do not always believe it will go down, because you will see why this is not always the case, because that's what everybody's looking for. Let's go to this example. It's moving down, everybody's hyped, and then they are selling, but what price is doing is taking them out, and then the next ones will say yes, but we go bullish. And then some SMC trader will catch their win, and they will say, yeah, our strategy is the best. They will scream, yes, we did it, after they made the loss, of course. Okay, every SMC traders do make here the loss, because that's the supply zone, right? Ideally it's giving you here the M1 boss, and then it's immediately dropping it, dropping through it, moving through your supply, and then it's moving down, mitigating your something, and then you take the long, and then you're happy that you call your 1 to 10 risk reward, but you made like 20 losses before. Yeah, let's go to the next example, because this is the one which can also occur, and this is exactly the one which SMC traders have the most fear of. So we can put this in the same context. Okay, so price is moving up and up and up and up and up the whole time, and then what will happen at the end of it is it will break the last time the structure here, moving up, right? You expect price from here to go crazy up, right? Because that's your next demand zone. You expect price to go up, and what will happen is price will just go and melt through it, will melt through your demand zone. Now this is right now the same example like here. Now the traders are cheeky, right? The SMC traders, to say, okay, I will get the extreme. Okay, ideally they will even consider something here, right? They will look here, say, yeah, this is my first supply zone, so I was just going to take this supply zone from here, and price is going into that direction, because right now we broke structure, right? We are bearish. Price should move like this. Then price is coming into my supply zone. It's giving me the M1 boss. I'm going to stake another position, and then price will go up. First stop loss hit. Okay, second stop loss hit, because that's my first stop loss hit at the demand, my second stop loss here, and now we are at the extreme, the best of everything, right? And then boom, one more time. So you got 3 stop loss hits just with one single concept that we can see here. And this is just crazy, you know, and you will see that this will occur also very, very often. Now the opposite, price is moving down forever to the downside. We expect price to continue to move down like crazy, and then we got the supply zone. We are happy to have the supply zone, and we want to take exactly from there our short. And what will price do is move up, break structure, tell us, okay, we're bullish, we are cheeky, we're going to look for a long, and boom, price will go all the way through the demand zone. And in this case, you got again trap zone and more trap zones. So you can see this kind of thing, what we see here, totally destroyed the SMC traders. This one, only one loss. This one loss, also one loss, because they will lose their trade here. So you see, it will depend then on the perspective of that one trader, okay? Because some of them will understand, right, that maybe I should not take the short and I take the long, and I will be profitable here. The other one here says, okay, I wait for it and I'm profitable here, but the other one is losing the position there, and here at this, the majority is really losing it. So yeah, these are the smart money trap concepts, okay, what we can see on the charts. This is really from every perspective how you can view it. Of course, there could be like crazier examples, like for instance price moving down, then here you got another demand zone giving you like the reaction, then moving all the way back down, building up here additional trend liquidity, you know, moving up. Then you got here technically again a new supply zone giving a reaction to it, boom, taking it out. Then that one supply zone will work out, but not forever, because it's time to go here. So you can see there are so many options on it, and that makes it automatically also a little bit tricky to understand, okay, when do we have right now a trap zone and when we do not have a trap zone. But it's right now already cool that we know that these trap zones exist, right? So basically every single supply zone, and that's the definition, every single supply zone and demand zone that do not work, and when I say do not work, is will not push the price in the main direction, or will not at least break some form of structure like it did here, is not one which is considered a valid supply and demand area, but it will be considered as an smart money concept trap zone, okay? It's an SMT. So that's where, yeah, a lot of traders do lose their position, and not only smart money concept traders, because there are not that much of them in the market, but there are also normal retail traders who also think, yeah, this is some form of support, you know, some form of resistance, and they will also get trapped. Okay, so this is why I like to just call them trap zones, but I like to also use the pronunciation smart money concept trap zones. Why? Because it's basically always that one OB, you know, and we do not map out support resistance. We only map out structure. That's what we do, but we do not map out right now specific support resistance areas, because you will get stupid. You will need to draw so many areas, and this is why this concept is better to use to just mark these OBs, because then you got a position for it and you understand where they will lose their positions. And now for the question, can you trade these trap zones? Like I said, you can. But the problem is, what if this scenario will occur and it will just go straight through your demand and supply zone? Yeah, well, then it's not cool. Here, it will work out. So also for these trap zones, it's cool if you have like additional confirmation on the lower time frame, for instance. So that's it for this video, guys. See you in the next one.